This is Helen McDade with Falch Ireland's Enterprise Support Unit, and I want to take the next few minutes just giving an overview of the SBCI loan schemes that are in the marketplace at the minute, particularly in relation to Brexit. So I guess I'll start with who are SBCI. And the background to this is, unlike many other European countries, Ireland didn't have a state development bank to sustain funding to businesses throughout the financial crisis. So as Ireland was exiting from the EU IMF programme at the back end of 2013, the Taoiseach and Chancellor Merkel agreed that the German KfW Bank would help finance the Irish SME sector. So that led to the creation of the Strategic Banking Corporation of Ireland, or SBCI, and then that was established into Irish law in July 2014. And really the purpose of the SBCI is to ensure that Irish businesses have access to long-term funding. So just for a bit of context, as part of the Brexit response programme, Falch Ireland has worked closely with SBCI to ensure that their loan schemes are accessible to tourism businesses. We've also engaged with the pillar banks to better understand and address some of the operational issues in rolling out the scheme to the tourism trade. So the first step in the process is to get an eligibility code from SBCI, and I'll talk about all that in a bit more detail in a minute. But the most important thing to remember here is that these are loans, they're not grants. So once the eligibility code is received, then the loan application process will follow the bank's own credit policies and procedures, terms and conditions, etc. Now, it was also identified, and one of the blockages that was highlighted as we were working on this was that the preparation of a business plan, particularly by smaller operators, can often be a block. So as part of the Brexit response programme, Falch Ireland can provide mentors to help businesses through the whole process. So let's have a look at the schemes themselves. So there's currently 2 schemes in the marketplace, and you can get all of the details on their website, and I'll give you their email addresses at the end. But this is a brief synopsis of the main points of each scheme. So we'll start with the Future Growth Scheme. So the Future Growth Scheme, it has a pot of 300 million. It is available for 36 months from commencement or until the scheme is fully subscribed. It was launched in April 2019, and overall the scheme it's really accessible, it's really easy to understand, and I know that interest in this has been particularly strong since the launch, with well over 600 applications in a relatively short space of time. The features of this loan: the loan amount is from 100k up to a max of 3 million per applicant. The interest rates, you can see, they're very dependent on the amount of the loan. The loan term for this is a repayment term of 8 to 10 years. So again, it is very much about that strategic longer term investment. 500k of that loan is unsecured because it's backed by the European Bank. And then there's the option for interest-only repayments available, but that'll be part of the discussions that you have with the bank when you're taking out the loan. So these loans, as I say, are very much focused on being used for the longer term investment. And applicants just have to choose from one of the criteria. So it could be investment in machinery or equipment, R&D, business expansion, premise improvement, process innovation, or people and systems. So it really is kind of quite a broad scheme. Now, who can apply? It's really open to small, mid-cap businesses and SMEs. So SBCI, their definition of the same is that a small mid-cap it's not an SME, but it still has fewer than 500 employees. And an SME is defined as having less than 250 employees, turnover of less than 50 million. The really important piece for this scheme in particular is that it's for independent and autonomous businesses. It's not for businesses that are part of a wider group of enterprises. Has less than 25% capital held by public bodies, and is established and operating in the Republic of Ireland. Now, who can't apply? And this is really, it's for firms in financial difficulty. This scheme cannot be used to restructure debt. Firms that are bankrupt or being wound up, or their affairs are in administration. Maybe in the last 5 years it has entered into an arrangement with creditors in the context of being bankrupt or wound up, or any business that has been convicted of an offence or any other illegal activity. So the process itself, there's an online application that's made to SBCI for an eligibility code. Now, they're turning these around quite quickly. So once this is received, then you can kind of go to the lender and start the loan process. Now, the eligibility codes for this scheme are valid for 6 months. So the advice is, even if you're not intending to use the money straight away, to go ahead and have this part of the process done, so then when you're ready, you can start the process with your bank. Now, the loans then are processed by the banks. Currently, Bank of Ireland, KBC and Ulster Bank are processing loans. AIB will be up and running shortly, and then PTSB will also be participating by the end of Q4. So that's a brief overview of that one. So let's have a look now at the Brexit loan scheme. So the Brexit loan scheme also has a pot of 300 million, and this one is really designed specifically to provide easy access to funding to support eligible Irish businesses to implement any necessary changes to address the challenges posed by Brexit. This scheme was opened in March 2018, and it'll remain open until March 2020. And again, although the loan money is made available through the SBCI, the scheme itself is operated through the main pillar banks. Now, the features with this loan, main difference is this loan is only open to SMEs, so it's only open to businesses that have fewer than 250 employees. The loan amounts here are much smaller. It's 25k to 1.5 million. Interest rates, a maximum of 4% interest, but there is some negotiation room there. The loan term on this one is for 1 to 3 years, so it's very much a shorter turnaround. The unsecured proportion is again up to 500,000, and there are optional interest-only repayments available. And key here is the loan amount and the term is very dependent on the loan purpose itself. So again, that'll be part of the conversations that you'll have with the bank. The process itself, the process again is made through online through the SBCI, and this one is a little trickier, and there's a number of criteria for the loan scheme, and businesses have to meet one of the Brexit criteria and then one of the innovation criteria. Now, it looks complicated online, but really the main thing to remember is that the most relevant criteria for businesses are in the Brexit criteria. It's number 4, and that's about a minimum of 15% of existing business comes from the GB or Northern Ireland market. For the innovation criteria, criteria number 1 is that at least 80% of the loan will be spent on the research and innovation activities, with a remainder on costs necessary to enable those activities. Or innovation criteria 9, where you intend to use the loan to invest in producing, developing or implementing new or sustainably improved products. And the loans here, once the eligibility code is received. Now, the eligibility code for this is valid for 4 months. So again, the advice is, even if you're not intending to use it straight away, go ahead and have this stage of the process done, so then whenever you decide to do activate it, you can just go straight to your lender. Now, these loans can be used for future working capital requirements or to fund innovation change or adaptation of the business to help mitigate any impacts of Brexit. And to be fair, the SBCI are applying a very broad definition of innovation in order to best support tourism businesses. And some of the potential projects or initiatives as examples of what could be included, but they obviously not limited to these. Costs incurred in expanding current sales team to focus on GB and Northern Ireland market retention and the identification of new opportunities in those markets. Could be the cost of a business development manager, maybe to exploit opportunities in new markets to drive market diversification. It could be other market activities, attendance at overseas trade shows, updating collateral to appeal to new markets, photo shoots, etc. It might be about internationalisation of your website with visual aids and page translations to really attract visitors from your target market. Or it could be things like technological solutions to address business concern or capitalise on opportunities. So it could be things like new or upgraded revenue or channel management systems that could help drive more profitable channel mix and create exposure in new markets. It could be the addition of audio and language facilities to improve the experience for international visitors. Might be the implementation of an online booking capability. Could be holograms and a visitor attraction to bring a story to life. So they really are kind of quite a broad definition overall. So here are the links to all of the information. As I say, both are on the SBI website. The SBCI have also put in place a helpline to help talk businesses through the scheme and review their eligibility. And and also all of the main banks are very familiar with using these schemes, because you can actually go and talk to your own bank, because obviously it's sometimes recommended go and talk to your own bank, because then the paperwork side of things might not be quite so onerous. So if you're a tourism business and you want to apply for a loan, so you can avail of a Falch Ireland mentor to help. So you can either contact your local Falch Ireland representative, or you can contact the Brexit response team at this telephone number, or you can email us directly at this email address. Thank you.